Hi, everybody. My name is Carrie Naoni. I'm the Executive Director of TiE Oregon. Thank you so much for being here. I know most of you, but we do have a few new participants and new charter members that have joined within the last couple of months that we will introduce here in just a little bit. But first and foremost, I do want to thank all of our sponsors that you see on the screen. If you are working with entrepreneurs or are in need yourself of a lawyer, funding source, or an accountant, or a place to work, please take a look on the screen and recognize that these folks help support TiE, and therefore we would love for you to support them as well. I don't have too much to do other than turn it over to Brigitte Pinueski, who is a TiE Oregon board member and a charter member, and also an angel investor. And she has asked Brooke Pollock to come and talk to us about all of the amazing things that's actually happened through this crazy 2020 year with blockchain and crypto markets. So I'm going to just turn it right over to Brigitte and take it away.
Great. Thanks, Carrie. Thanks so much, everyone, for joining. Carrie mentioned that we have some new folks in the audience. And so if you're willing to introduce yourself, that would be great. Let me just double check. Has Allison joined yet that you see, Carrie?
She has not.
Okay. What about Manish?
Yes, he is on.
He's on. Manish, are you willing to go ahead and give us a quick introduction?
There you go, guys. Sorry, I was just switched my phone. Hello, everyone. I'm Manish. I think probably one of the newer charter members to join in the last couple of months. We moved to Portland in 1995. So lived here for a while now. You know, I co-founded a business called ProKarma, which is got rebranded now to PK, and it's a global technology services business. And founded in 2004. I recently retired from the business. Still serve on the board of the company, and look forward to getting to know you more as, like Carrie said, once this crazy thing gets settled down and we can all get together, have a drink, and have some fun.
Great. Thank you so much, Manish. Now I see Anna joined. Anna, do you have a couple minutes to introduce yourself? We're just going to take a quick smattering because there's too many people to ask everyone, but some of us are new, so it's nice to meet some of the charter members.
Yeah, sorry guys, I was trying to connect and coordinate things with the kids, but yeah, so I'm Anna Shoud and I'm happy to be here today. I am an entrepreneur in Portland, Oregon, and I had a company that I exited last year. TiE was one of my investors. I have TiE very dear to my heart, and now I'm starting a consulting company where I help startups and early stage CEOs with strategy and execution. So that's what I'm doing now.
Great, thank you, Anna. And Raj, do you have a couple minutes?
Yeah, sure. So hi everyone, my name is Raj. I recently graduated from Oregon State University and have joined with TiE Oregon as an intern till the end of the year. So up till now, it has been a great opportunity for learning. Thank you.
Excellent, thank you. All right. What about Alex? You're new to this group. Do you want to give a couple of sentences introduction to yourself, Alex? You're on mute.
Unmute, there we are. Just learned how to unmute my Zoom. Veteran of many companies, startup in face recognition, storage, moved to the Gorge about 5 years ago, and now occasionally making angel investments, mostly exiting prior ones, but interested to see what you guys are up to.
Great, thank you. All right. Anybody have a burning desire to introduce themselves?
We've got VJ that's new as well. He just joined. VJ.
All right. VJ, let's have you introduce yourself.
You're on mute.
I'm also learning how to unmute. So yeah, my name is Vijay. Sorry, I'm a little late. I'm a new charter member. I've been a member for a few years on and off, but I'm relatively new to charter membership. Advisor to a couple of companies and starting to become an investor. So I'm kind of new to this game. I'm in the area for a while, but yeah, I'm learning to know everybody and then trying to learn this business as we go along.
Great. Thank you so much. All right. Well, we should get started. We gave everybody 9 minutes to join, so there will probably be a few people still trickling in. I want to thank you all for taking the time. I was reviewing the year in review and thought, oh, this is crazy. There's so much to cover. We should be doing this every 6 months when we have a year that looks like 2020. But as some industries were suffering because of COVID and the economic downturn, you know, crypto and blockchain seem to have had a very different experience. And I'm so excited that Brooke is here this afternoon, evening to share some of the details with us, because clearly none of us have the time to watch this space in the level of detail that would help us come away with the key points as aggressively as Brooke seems to be able to. So Brooke, it would be great for you to give us some of your backstory and talk to us a little bit about Hut Capital and how you arrived to where you are today.
Yeah, certainly. And thanks for hosting me, and appreciate everyone joining this evening. My name is Brooke Pollock. I am the managing partner of Hut Capital based here in Portland. My family has also been here since 1995. So, you know, wasn't born here, but consider myself, you know, local and an Oregonian, certainly. So my background before starting Hut Capital was, I guess, a decade in the private markets investment world. So I graduated from Oregon State back in 2008. You know, spent some time working for an investment consulting firm here in Portland called CTC Consulting. Our client, you know, base was primarily family offices. And, you know, we did a bit of everything, but the team I was on worked in the private market space, helping these families to invest in private funds as a limited partner. And that was pretty much everything from, you know, venture capital included, but also buyouts and growth equity and credit and distressed and real estate and energy and timber and, you know, a whole host of other strategies that, you know, that are in that market, pretty much anything illiquid, not a hedge fund. So did that for a while and then moved out to the East Coast for a few years. Moved out to Philadelphia, joined a firm called Hamilton Lane, which is a very large private equity advisory and asset management firm, headquartered in Philly and now a public company actually. But they work more with like pension, sovereign wealth, kind of very large pools of capitals. They have over $500 billion of advisory assets given their client base. And, you know, advise these clients on investing in private equity as well as doing a lot of discretionary funds. So you're managing fund of funds products, co-investments, you know, secondaries. And I was focused on doing secondaries there. So we managed a fund that would buy out limited partners in, you know, various private strategies. And, you know, we would help GPs kind of later in life to restructure their funds, give them additional capital and runway, you know, help corporate and, you know, kind of captive venture and private equity arms to spin out and be independent, kind of anywhere where you're buying existing portfolio of assets managed by a third party typically. So did that for a couple of years and then moved down to Baltimore. I had the good fortune of joining a firm called Greenspring Associates, which is a large venture platform, I think over 12 billion of AUM these days, which, you know, for the venture world is pretty sizable. And, you know, we did fund of funds, secondaries and directs all within venture, you know, helped to build out their secondary business in particular, but spent a lot of time across the platform investing, you know, as an LP in both established and emerging venture funds, you know, a lot of brand name funds that you'd be very familiar with, as well as a lot of, you know, emerging managers that you would be much less familiar with. You know, doing secondaries, both, you know, LP secondaries where we'd buy out limited partners and venture funds, as well as direct secondaries where we'd, you know, buy stock from founders, management, early employees, that type of thing. And just doing very traditional growth stage venture pretty agnostically within the tech world. But the last year I was there, spearheaded their efforts in the blockchain space. And that was really just had a long personal interest. I guess it went back to, I'd gone to school with a couple of guys who were very early in the space and, you know, ran early companies around Bitcoin, run notable companies in the space today, I guess to this day. So it caught my attention. They're doing well for themselves, you know, took note, I guess. But, you know, really it wasn't for a while that I really overlapped my day job for me to truly, I guess, dig into everything that was going on and fully grasp it. Even doing venture full time starting in mid 2014, there wasn't much overlap with the day job because we weren't doing early stage investing, which is, the entirety of the opportunity at that point in time. But started paying closer attention. Then 2017, started seeing a lot of these blockchain focused venture funds emerge. And at that point, finally had that excuse where there was overlap with my day job, went out, got to know all these funds, built those relationships, just, went down the rabbit hole, so to speak, fully. And, that ended up where, I was leading Green Springs efforts in the space for last year. I was there, as I mentioned earlier. So we did a little in this space, not much, because frankly, it wasn't an area of interest for Green Spring, and even to this day, it still isn't. But, we had a pretty broad purview in everything tech and startup, and, just found this market far more compelling, honestly, both financially and intellectually, and really driving real innovation. If we look out over the next 10 to 15 years, where that's really going to come from, I believe strongly then and to this day, of course, that this market is going to be the key driver of real innovation, and as well as venture returns for folks who are investing at an early stage today. So ended up leaving to pursue that piece of my work full time. Start HUT Capital, which is effectively taking Green Springs model and applying to the blockchain space. So I'll give you the quick summary of what we do. Obviously, I don't need to go into too much detail on that, but we're a blockchain venture fund to funds and direct investment firm, as I mentioned earlier, based here in Portland. Our goal as a firm is to provide diversified exposure to blockchain innovation globally, and maybe put another way, be a one-stop shop to get access to a diversified portfolio of the top blockchain and crypto startups through a single investment on a global basis. So practically speaking, we do a couple things from our fund. We invest as a fund of funds in early stage blockchain and crypto focused venture funds. So these are all closed-end funds. We don't do anything on the hedge fund side or quant and crypto trading. It's much more long-term focused venture strategies. It is a mix of equity and token investments, although it's more equity centric, so kind of more the picks and shovels from that perspective, but also backing early stage protocols and such. And then we also do direct investing. We come in at the growth stage where we make equity investments, effectively trying to pick off the best companies that emerge from these underlying managers, and obviously have a lot of intel and data on the companies at our disposal through the fund of funds program. So we're pretty young as a firm. We did the first close in our first fund a couple months ago. So we're still I guess a young firm from that perspective, and that's my background.
Great, thanks, Brooke. And just because looking at the attendees right now, we're still a nice small group. So let's start the beginning of this session, allowing everybody just to unmute themselves if they have a question, and we'll take questions as we move along. I know we have a lot to cover, so we may have to move to the chat box only later on, but let's keep it as informal as we can while we're as a nice tight group. So Brooke, why don't we start in, I did put in the, let's see if it's going to show up. As everybody's learning to unmute themselves, I'm learning that stuff that goes in the chat box doesn't come into your chat box unless you've already joined. So hopefully everybody has this link in their chat box now. It's a blog post that we're kind of working from for this session. HUT Capital has a nice website with a lot of information, and one of the posts that Brooke recently authored is this a year in review, which breaks down some of the key points that really sets 2020 apart from other years. And it sounds like the things that drove you into the space are those that sentiment is shared by many this year. So you begin by talking about Bitcoin going mainstream. Do you want to speak a little bit more detail around what you mean by going mainstream? And clearly with the COVID economic downturn and the Fed's printing dollars, a store of value is clearly something that Bitcoin seems to fit the bill for.
Yeah, certainly. So, Bitcoin and crypto in general have always got a bit of a back because of the early days with Silk Road and, some of the, less than ethical activities that it was being used for in the early days. And, it's really stuck around. But, in the last year, that sentiment has really changed, from a public facing perspective. And I mean, even just a year ago, there was just a certain, certain hesitance to be public, especially if you're like a corporation or large financial services firm, to be, active in the space and disclose what you're up to. And, you've really seen that change over the last year, where, you've seen a lot of, well-known investors, announce that they have positions in the space and that they own Bitcoin. It doesn't have the same, connotations, I guess, as it did, a year ago from a public perspective. And, likewise, you've seen, a lot of, new entrants to this space, large corporates and, well-known investors, who have really opened up the floodgates for others, where you don't have that same level of career risk, for example. You've had, well-known hedge fund investors, Paul Tudor Jones, for example, Jim Simmons from Renaissance Technologies, Stan Druckenmiller, announced that they hold Bitcoin, either personally or within their funds. And, it's the biggest piece of it has been driven by, the Fed's action this year, right? So they have printed, a ton of money. The Fed's balance sheet has gone up by, 75% since the start of this year. And, as a result, a lot of investors are saying, okay, well, if there's a lot of monetary inflation, if our government is printing money, how are we going to, protect our portfolios from that? And historically, folks have primarily used, gold and other real assets for it, but, gold has certainly been the key one. And, I think there's a growing acceptance of Bitcoin as a digital gold that, will help protect from, these types of actions. And regardless, that has all driven a lot of interest and really put Bitcoin into the, public conversation in a way that it really hasn't been before. You've also seen folks like PayPal come into this space. They now allow, all of their customers to buy and sell crypto through their platform. They announced it actually as a pilot program. They were, 2 to 3 more X demand than they expected. And they just said, screw it, we're going to, release this to everybody. You saw Visa, for example, just partner with a stablecoin provider related to USDC. From a financial infrastructure perspective, you just saw actually this morning, Mass Mutual, massive insurance company, buy 100 million, at least announced that they bought $100 million Bitcoin, on their balance sheet. We all know that insurance companies in particular are very, very conservative. So it just really seems like you've seen a lot of dominoes from that perspective, and the activity and the announcements really seem to be picking up, especially in the last couple months. So it's been very, very exciting to see.
So is that the main reason why Bitcoin sits now at 18K?
It definitely helps a lot. I think a lot of people have been buying this year. I guess, one, from a store of value perspective, that narrative certainly has caught on in a much more material way with institutions than it has in the past. And, you've seen just a lot of people, a lot of institutions buying, pretty sizable amounts of Bitcoin, which obviously is helpful for, for the price of Bitcoin. Mm-hmm. It's also just been a good year for, I guess, store of value assets in general. And Bitcoin certainly benefits from that, but I mean, Bitcoin has significantly outperformed gold this year. So even relative to other store of value assets, it's seen very strong performance. And, it's still small enough where, as these big players come in, they can, materially move the price. This isn't like, gold, which is an $8-10 trillion market. The Bitcoin market cap's only what, 360 billion, something like that, which, isn't peanuts, but small in the context of, the overall financial markets. We also had within the industry, there's belief that there was some artificial deflation in pricing, really in the second half of last year in particular, due to a Ponzi scheme in China that, confiscated a lot of crypto, and then the government went and sold it off. So, as that ended, there was some selling pressure in the market as well that really went away and, helped the price to do a little better this year.
That's interesting. But can you speak to the halving of Bitcoin and just this idea of when the halving comes to a point where the reward for mining is so low that mining may shrink or disappear? Where do you see it going?
Yeah, so for folks who aren't familiar with the halving, the Bitcoin network is secured by miners who are rewarded for securing the network in Bitcoin. And every 10 minutes, there's a certain amount of Bitcoin that get rewarded to these miners for securing the network. And every 4 years, that regular reward gets cut in half. So it started at 50 Bitcoin, they went to 25 and 12 and a half, and now it's 6.25, I think, every 10 minutes. So the last halving, I think, was in April of this year, went from 12 and a half to 6.25. So, the reward for those securing the network got cut in half, as it does every 4 years. So, it kind of has two impacts. I think one, it serves as a reminder, even though everyone's aware of it, of the scarcity of Bitcoin and the fact that there are less and less that are coming into existence. And, while technically you would say that should be priced in, you have historically seen strong performance post halving. To be honest, I'm a bit skeptical in terms of if that's really driving it or not. But, regardless, that is what you have seen historically. And the other aspect of it is like, okay, well, if the reward for securing the network is cut in half, is the network going to be as secure? Are people going to be, miners specifically, as motivated to, lend their computing power and their hash power and, I guess indirectly their electricity and the costs associated with that to, to secure the network based on that reward? And I guess, one, it depends on the price of Bitcoin, right? Because if the price goes up at least 2x every 4 years, which clearly it's done more than that in the past, that effectively solves that problem, because a Bitcoin is worth more, so the rewards are more. That said, well, I shouldn't say that. So if you look at the data though around the security of the network and how much hash power is going towards it, it has steadily increased pretty well. So there's no indication that the halving, for example, had any negative effect on Bitcoin security or the level of hash power being put towards the network. If you look really long term, it is something that people think about. The rewards for mining Bitcoin will run out in 2140. We'll all be long dead by then. So people aren't super worried about it. But eventually, it could be that miners are rewarded solely through fees. I guess if the community decided, technically they could change the $21 million cap, although it's such a religious thing that, it'd be difficult to see that happening.
Great, thank you. And then we also look at your list of key points, and you mentioned the financial structures and the market structures becoming more institutional. Do you want to talk about that area?
Yeah, certainly. So, really since 2017 in particular, once, prices went up a lot in crypto land and, got a lot more attention, the startups and financial infrastructure providers, have really been preparing for this whole, the institutions are coming, the whole mantra that, okay, well, prices went up, so now everyone's gonna be super interested, and, all these institutions are gonna come in and buy Bitcoin and get into crypto. And you really didn't see that until this year, in a material way, which I think it took a little longer than people expected. But I also think folks underestimated how slow institutions move, so it was not at all surprising. But in the meantime, you've had a lot of startups and large institutions really head down, building out the infrastructure for institutions, basically getting ready for them to come. And if you look at the financial markets for crypto, it's much more weighted towards spot markets, right? So these are not overly sophisticated financial market structures that have been built to date. We have basic spot markets, exchanges that are out there. You're now seeing the beginning of derivatives, options, futures, all that kind of stuff. But they're still extremely small on a relative basis compared to the spot markets versus the traditional financial markets. But that said, having those those various derivative products is very important for institutions. A lot of them actually go through like futures via CME, for example, versus buying Bitcoin directly. And if you look behind the scenes, the trading infrastructure, the custody infrastructure, all of kind of the stuff that isn't as sexy or in the public eye, but is incredibly important to the, quality of the market infrastructure, how much liquidity is on the exchanges, what do spreads look like, just the ability to, operate for institutions is significantly better, than it was even just a couple years ago. So, it's really paved the way, not just for institutions to say, hey, this is interesting, I'd like to allocate, but to actually, feel comfortable doing so in a way which definitely was not the case a couple years ago.
Great. And then regulations seem to be moving in the right direction as well. We're looking at a new SEC chairman.
Yeah. So the head of the OCC, Office of the Comptroller of the Currency, is a former Coinbase chief legal officer. But yeah, the head of the SEC, Jay Clayton has definitely been pretty anti-crypto through his tenure. He seems to have his, the Bitcoin ETF, for example, he's been very, very against that. You could say beyond measures of reason or necessarily logic, especially relative to what else a lot of the other SEC allows if you look at other products out there. So, I do think it will be positive having him gone. Obviously we have to see, who takes his place, et cetera, but I can't imagine it will be negative from that perspective. The Trump administration has definitely been a bit, negative towards crypto in general as well. So, likewise, we'll see what happens in our Biden administration, but I do think, if anything, it will be positive, from that perspective, although, likewise, we'll have to see how that plays out. And, people worry about, like a lot of the securities law around tokens, for example, but you really haven't seen any sort of significant, significant action from the SEC outside of, just tackling very obvious, security law violations where people were doing unregistered security offerings through ICOs or, outright frauds. So, the concerns around that, okay, the SEC is going to go out there and just shut down all these tokens has been pretty unfounded, which, is certainly good. They've been, a bit hands off, even though I know the industry would like significantly more clarity. So, there's certainly plenty to complain about, but I think the industry overall feels much better about the legal risk around this space than it has historically, and that that's definitely trending in the right direction from that perspective. But yeah, still a lot more work to do.
Hey, Brooke, so did you see the competition for Bitcoin, coming from what sources in the future? Is it payment processors? Is it banks? Is it Brooke Cash tomorrow? Could be a while, because there are other players out there who just, Bitcoin's still been like the Apple of cryptocurrency. So where do you see the world moving as this thing, gets more and more mainstream in some way, other shape or form?
Yeah, so for Bitcoin specifically, the market broadly views it as a store of value asset, monetary asset versus, let's say, a more functional payment-based asset at this point. Stable coins, which I think we'll come to a little more depth, are much better for payments because they have all the same benefits without the same, the fluctuation in pricing. So it just makes a lot more sense. So I think we're going to see with Bitcoin is, I guess, twofold. One, it's really competing with other store value assets like gold for mind share. And, I do think as younger generations who are much more tech savvy and digitally native, and, if you look at, surveys and other various data, are more prone to own gold or Bitcoin versus gold relative to older generations, that's going to become a much more fierce battle over time. And there's plenty of room for both, but I think that's the biggest long-term competition for Bitcoin. Within the industry, I do think you'll see some pressure from privacy coins. One of the issues with Bitcoin, of course, is that it's actually not it's not anonymous as some folks believe. It's pseudonymous, and there are increasingly strong analytics tools to figure out who own those addresses. And so if you want to use it for financial transactions, that might not be ideal if you have your whole financial history effectively public. So there are other more privacy-centric coins like Monero and Zcash, for example. I do think we're going to see significant more attention on the privacy aspect of it over time. You know, whether that gets enacted by Bitcoin, whether maybe some of these privacy coins gain more share because of that, we will see. I expect there will be a material legal battle, or at least regulatory pressure, because the government doesn't like not seeing everything. So just like they did with encryption in the internet, back in the 90s, I imagine you'll see a similar fight with privacy over time in this space, which will be, I'm sure a lot of fun. But that's really where I see the competition. Ethereum, for example, is not competing at all with Bitcoin. They're kind of different categories. Even within crypto, where maybe I'm deciding, do I put money in Bitcoin or Ethereum or something like that? But in the long term, they're really not at all competing for what their purposes are, and for mind share, et cetera.
Great, thank you. Well, let's move over to DeFi. Do you want to start off with just refreshing the definition of DeFi and how 2020 has been a serious boost to DeFi?
Yeah, certainly. So I'll start with a little data here just for context in terms of the growth, and then I'll actually explain what it is. So I'll share my screen here real quick. So hopefully you guys can all see this. If not, let me know. But so this is from the blog post that Brigitte put in the chat box. So right here, this is effectively the growth in the DeFi market over the past year. This is effectively how much value is locked in the smart contracts of DeFi applications. And the data, if you look at the last year, we've basically gone from like 600 million. We're actually now about 14.5 billion. So this, it's up a bit since what you see here. So you've seen, over 20x growth in this space year over year. Likewise, this chart right here shows, total DeFi users over time, hockey stick type growth. We're now at over, this is not quite up to date, but, now well over, I guess I should say, 600,000 users, which is, clearly significant growth every year over year. If you look at, maybe a year ago is right here, you're well under 100K. So, it's an industry that's got a lot of attention because of that growth, but, what is it? So, DeFi, I would best think of as automated finance, built on top of blockchains. So, historically, there's been a lot of attention on layer one blockchains, these smart contract platforms like Ethereum, and, kind of all the, I guess you could say, Ethereum killers out there that are, trying to compete with it, because they're faster or better, or whatever it is. But, most of the activity still is happening on Ethereum. And, we have all these layer one blockchains. There's been a lot of investment in that space, but okay, what are you actually going to build on top of these blockchains? What are the applications that we're going to build on top of these layer one smart contract platforms? And, the area that's, seen the biggest growth so far is DeFi, as you saw a second ago. And as I just mentioned, you really think of it as, automated finance applications built on a blockchain. And, these are all open source, and there are no intermediaries like you would with traditional financial services. So, a couple examples. One that's seen a lot of growth over the past year is called Uniswap, which is a centralized exchange. And, it's basically just a protocol for exchanging assets that are, are based on Ethereum. So, it's much easier to trade on, for example, than Coinbase. You don't need to go through KYC. You don't need an account. All you have to do is just, link your wallet to it, start trading. And it's just so easy to use, which is why it's gotten so much attention. And, because Uniswap is not a company, it's not inserting itself in between these transactions. It doesn't ever hold assets. It's much more simple, for example, than working with an exchange. And, they've seen huge growth over the past year. They did more volume than Coinbase in, I think it was September, in terms of transaction volume after, basically being at zero a year and a half ago. So, thinking of a more traditional financial service, if you look at the lending market, that's also been a big area for decentralized finance. And, you can look at a group like Compound, for example, or Aave, which are, effectively, I guess you could say interest rate protocols, but, are typically used for borrowing and lending, where, these systems, there's no underwriter sitting there that's looking at your history. Either you meet the criteria for the loan based on the collateral you have, or you don't. And you can literally go on, get a loan in 5 minutes. They don't care who you are because, they're not going through your credit history. They're not looking all that kind of stuff. It's purely automated based on the inputs of the system for, what are the criteria for having a loan, what collateral do you have? And okay, well, you lock that up through a smart contract. So, if you don't pay us back, we can automatically take the collateral. If the value of the collateral declines, you're required to put in more collateral. Otherwise, we take your collateral, et cetera. So it's all automated through smart contracts and doesn't require any intermediation. And it's just very transparent as well. So, I mean, it is just so easy, versus, let's say, going to your bank and taking a loan, for example. I mean, that's a big piece of why it's taken off. But the other part of it is incentives. So this isn't necessarily specific to DeFi, but DeFi has really brought this to the forefront. And it's the idea of using tokens as incentives to to use products and participate in networks. So, for example, let's say Uniswap, for example, this decentralized exchange that I mentioned. So, they operated as a centralized company. They sold equity. They're out there, had their product, and they decided that they were going to launch a governance token. So, this token does two things. One, it seeds direction of the protocol to the holders of the governance token. So there is no longer a centralized company that runs Uniswap. It is completely governed by token holders, and the company doesn't they have their role in it by way of having tokens. They have a dev team that is tasked with doing what the community asks them to, but it's very different than having centralized control with as most companies do. But two, the governance token is also used to incentivize members of the community. So, for example, if you are a liquidity provider, so basically you're locking up your crypto to provide more liquidity to these markets, you are compensated in Uni, which is the native governance token of Uniswap. You are rewarded for using Uniswap from a trading perspective. And it's an extremely powerful tool for incentivizing behavior and bootstrapping network effects in a way that really has never been possible before. And you saw that really explode this year, where suddenly you're basically getting paid to participate in these networks, and very, very lucrative ways where if you're bullish on the future of these protocols, you can basically make money by using them in a way which it certainly does not exist in the traditional finance world, and likewise really hasn't existed in this space before. So that's also been a very powerful and so far very successful experiment. We'll see over time as those incentives die down a bit. Does that impact user behavior? I think for the most part, for networks that have built strong communities, have a great offering, provide a lot of value, they'll do well. And if they don't, then they'll suffer as those incentives go away. But that's been super interesting and has allowed just everyday retail people to participate in the growth of these networks, and the value creation mechanism from day one in a way which really has not been possible in the past.
So do you think that being easy isn't enough, that the real story behind Uniswaps is the governance token? That assuming they didn't do the governance token, would they have had anything close to the growth, that this incentive is really what drove their growth?
Yeah, I mean, they were growing like crazy before the governance token. So, it was not the sole reason, but you did see more growth afterwards. It's actually, I'm going to refer back to a couple pictures here for a sec. Share my screen. So looking at Compound and Uniswap, so right here, this is the total value locked in Compound. So it's how much what value of assets are locked in the smart contracts for their lending protocol. And I will let you guys guess when the governance token was launched, because you can see it right here. There's a huge spike in activity, and this was really the first one that proved out this model. So it was pretty extreme at the time, but you basically went from 100 million to 600 million, in a couple of days of value locked in the system. And you've seen good growth since then, but clearly it was a huge factor in jumpstarting the amount of liquidity in the network and the usage of Compound. So that was a clear factor where that had huge impact on usage once those incentives went into place. You look at Uniswap here, likewise. So this first one here actually was not when it was launched. This was a whole different story, which we don't need to get into, much more complicated. But I would effectively ignore this pop here. It was kind of a very unique, weird thing that happened. So you basically were growing, normally to about here in September, and then right here where you see that big spike was when the incentives were, or the governance token was launched, and when those incentives went into place. And they actually also provided 15% of the fully diluted amount of uni tokens to past users as well. So not just incentivizing future users, but also rewarding past users and liquidity providers for the network. So it was pretty interesting from that perspective, but you did see a pretty significant jump obviously when that happened. But since then, I mean, you've seen further steady growth, right? So people are not using Uniswap solely because of the incentives. It's the number one decentralized exchange by quite a wide margin, and my opinion is that it would be no matter what. So, but clearly it was a nice benefit. And this isn't just a number, but also this means there's more liquidity. That means they can have better spreads, better product, better markets for participants. So it's it's kind of win-win from all perspectives.
So what does that mean for Coinbase and the sort of old players providing the analog to digital model?
Yeah, I mean, Coinbase doesn't go anywhere. Centralized exchanges aren't going anywhere. For the majority of people just opening a Coinbase account, having a username and password like they're used to, not worrying about custody, not having to set up a MetaMask account in order to interact with, Uniswap, et cetera, is going to be the easiest thing. That's not going to change. And also for institutions, they want a custodian, right? They don't want to have to worry about their own, cold storage of crypto assets. They're going to work with Coinbase or Fidelity or whoever for custody and execution. So yeah, they're not going anywhere. But the decentralized piece of the market definitely has gained market share. It's pretty, significantly over the past year, even though it's still a small minority of the overall industry. I think if you look at decentralized exchanges, for example, it's about 15% of volume that goes through those versus centralized exchanges. So relatively small despite the significant growth over the past year.
Yeah, exciting.
Yeah,
well,
the other thing about DeFi, I guess, is that because these are all open source protocols, you don't need permission to build on top of them. So once someone has built something cool, you can just build your product utilizing that protocol, and you don't have to recreate everything. And a lot of these protocols interact with each other to create very novel, financial products in a way which is absolutely not possible in the traditional world. And as such, the pace of innovation is also quite incredible, because everything's so open, and you can just kind of build on top of each other and fork code and a lot of stuff which wouldn't be so easy in the traditional financial services landscape. Which
of course harks back to what you said at the very beginning of the talk. This is the area where all the innovation is happening for the next little while. Certainly innovation at pace, which includes, of course, stable coins. Those were around for a while now, but didn't get a lot of pickup. But recently that's changed. Do you want to explain stable coins and why 2020 was again a good year for these types of assets?
Yeah, certainly. I mean, just from a data perspective, I guess the value of stablecoin assets has grown from about 3 billion at the start of 2019 to somewhere over 20 billion today. So, likewise, you've seen pretty significant growth in stablecoins over the past, I guess, nearly 2 years. For those who aren't familiar, alluded to it earlier, but a stable coin is effectively a crypto asset, pegged to typically the US dollar. I mean, technically you could peg it to anything, but stable coins are typically a crypto asset that's worth $1. So why would you want that? Well, cryptocurrencies have a lot of very compelling characteristics for payments and remittances, which are much tougher when you have a volatile value of that asset. So, if you're trying to use crypto for payments, or if you're trying to use it for sending money to family in another country, or any more kind of payment oriented use case, you don't want the value of that asset fluctuating. So stable coins are effectively the best of both worlds, where you can hold a US dollar denominated asset as a digital currency and get all the benefits of moving it around globally without borders and seamlessly and very cheap, but not having to worry about where's the price going to go. It also is very attractive for folks who are in emerging markets, or even developed markets where there's higher inflation and a lot less stable financial government, or I guess I should say governance, where you have 5 to 20% annual inflation. A lot of them don't have ready access to other financial markets, and this allows them to effectively hold dollars no matter where they are in the world, and provide much more stable value of their of their money, versus their local currency in a way that has not always been possible. So you've seen huge growth, I mean, both from a payments perspective, but also, Tether, which is the largest one, is mostly used in Asia, as a way to, move around US denominated capital, across borders, and to basically hold a US dollar cash position, for folks who are, involved in the crypto space. So, that's continued to see huge growth as well. The second largest stablecoin is called USDC. It's backed by a consortium, with the leaders being Coinbase and Circle, which are two, notable crypto startups. And they actually just partnered with Visa to help bring, that infrastructure to Visa's network, which, is obviously a pretty impressive accomplishment, and, interesting to see Visa take that route.
So will that drop our Visa fees?
Not if Visa has anything to do with it, but I'm sure it's going to take a bit of time for that to get all rolled out. So it's difficult to speculate how that's going to look.
Mm-hmm. And speaking about rolling out, Facebook's Libra has been on the docket for a long time.
Yes, it has.
Any further development?
So my first thought is it's unfortunate that Facebook's doing it, because everyone hates Facebook, and for good reason, and legislators hate them, regulators hate them, and it's not undeserved. So what they're doing is incredibly interesting, but because it's Facebook doing it, even though technically it's not Facebook anymore, there's a foundation that manages Libra. It's actually now they rebranded to Diem. I couldn't tell you why, but maybe just due to unfortunate regulatory branding that's been now associated with it. So they've been looking to launch in Q1. Regulators still hate it. They did change the structure of it. Initially it was built to be like this global currency, right? It wasn't just pegged to a dollar or any single currency. It was pegged to a basket of currencies and hard assets. So US dollar, yen, euro, gold, oil, whatever the exact assets were. But you had a situation where, if you roll that out to 2 billion people, you could effectively have like this supranational, like world currency that Facebook, has significant influence on, and they did not really like the idea of that for obvious reasons, given governments like to maintain control over money. And so what they did is they basically have forced Facebook to now take a more traditional stablecoin route. So like these other stablecoins that I was talking about that are paid to the US dollar, Diem will look like that, where it's just a US dollar digital currency, that will be rolled out to, to, I guess they're, well, not nearly 2 billion, because, places like India for example, it probably won't happen anytime soon, but a very large base of customers. So yeah, we'll see. There's definitely still regulatory risk there, but the idea of putting digital wallets in the hands of a billion plus people is very powerful. Opening up that ecosystem to build on top of, getting a lot more people comfortable with digital currency. That piece of it would be very good for the industry. Your views on Facebook and all this other stuff aside. So, it could be a pretty big milestone for the growth of the stablecoin industry, but we'll see what happens. I wouldn't bet all my money on it launching in Q1.
Okay. And then, like Facebook, many central banks are also trying to issue central bank digital currencies.
They are. Yeah, that's been a big area of attention from central banks because they see all this happening, and they're worried they're going to effectively lose control of their money. I mean, if you effectively have all these other groups controlling the money through digital currencies, maybe they're pegged to your fiat currency, but they would much rather control the digital currency themselves rather than having third parties responsible for that. So you are seeing a lot of developed countries look into it. I'd say a lot of them, that's all they're doing though for now, is looking into it. And they're spending a lot of time figuring out what is this, how would it work, what are we going to do. But they are a little slow, despite what you see in China, for example, where they've been working on it for quite a while. They've rolled out their I guess you could call their own digital currency. It's the antithesis of crypto. It is not open. It is not public. It is everything that is bad about blockchain, because the Chinese government is going to use it to exert even more control and influence over its citizens in a way that is, very poorly looked upon in the industry. And there's definitely worry that, if China rolls this out, gets other countries to rope into it, that, they could gain a lot of international monetary influence because of that. So, a lot of folks look at it as kind of a geopolitical battle where, we need to have these digital currencies in existence. And it's actually good for the US dollar to, digitize it and make it available to more people, from a geopolitical perspective. And that whole thing is pretty fascinating if you kind of go down the rabbit hole of that. But regardless, you have seen way more attention from governments. I mean, I think they all see the writing on the wall that this is where the world's going. And it's only a matter of time until currencies move digital, including the ones issued by our governments. But I do think the ones that are a little more comfortable, especially in the US and Europe, for example, are going to be slow and kind of take their time.
Absolutely. I'm glad you characterized the Chinese effort the way you did, because I'm always concerned with all of that surveillance that goes on. Apparently, even visitors to China are unable to purchase anything with the US dollar. They have to use Chinese currency via, automated card the whole time they're there. So every authority in China knows exactly where you've been every minute of your visit.
Yeah, I'll be curious to see how that plays out, because from a technological perspective, a lot of folks believe that private blockchains just are effectively going to die over time, right? So is China effectively going to have to transition its currency platform to a open blockchain eventually? We'll see. Obviously, they're going to fight it quite significantly, but yeah, we'll see how that plays out.
So Randy, you're in the banking business as well. Have you seen any evidence of this activity in your corner of the market?
No, I think what we're monitoring and watching is the continued regulatory environment that's been touched on, and what I call the cultural difference between the fact that the in-place industry has to deal with the anti-money laundering or the know your customer, all the rules and regulations, while on the other side, you have blockchain and everyone wanting a total open environment. But I think what you will see is when you're talking about the DeFi and looking at the payment schemes and things that people are coming up with, that the regulators are going to have to address it because we are seeing such growth in that area and it helps move out a lot of friction within the system. So what I would say, and I'm curious to see what Brooke has to say, is how are they going to reconcile the regulators' need to control and understand what's going on to keep out the bad actors versus the open-end systems that most of the blockchain or currency folks would like to see?
Yeah, and I guess as you think about DeFi, your regulators haven't been too worried about it. It's been, until recently, it's been pretty small as to, apparently they haven't really cared. And they're definitely keeping a closer eye on it now than they were historically, given the growth as you just alluded to. And yeah, it's hard to know where they're going to come out on that. I do expect increased regulatory scrutiny for DeFi. Whether that leads to hindrance of the industry. I mean, if that happens, it's just going to move offshore. It's not really going to change anything. It just means that less of the innovation is going to happen here in the U.S. So hopefully that doesn't happen. But I also expect that, and the fact that a lot of these, they make the argument that, well, this is just a protocol. There's no one involved here. It's just an open network, and as such, we don't need to have the same types of regulations. I'm not sure regulators see it the same way, given that their job is to regulate. They have a tendency to do so as a result. So yeah, we'll see on that. I'm hopeful that they're not going to hinder it in a meaningful way, but I would not be surprised if they force certain innovation to move offshore, as they already have. I mean, if you look at a lot of the usage and innovation in the space, it's not being used in the States. We can't even use it in the States. And it's being used by people outside the US. So.
Yeah. Well, moving on to some of the more exotic tokens, non-fungible tokens. Do you want to talk about what those are and the fact that their value has also improved?
Yeah, so I guess the idea of a non-fungible token, just like at a high level. So I guess to use the opposite example, Bitcoin is fungible, right? If I give you a Bitcoin for a Bitcoin, I don't care which one I own. I mean, technically you could argue that, okay, well, if this one's been through a mixer or something, like, that's not technically true, but in theory, you don't care which Bitcoin you own. They're all the same. They all have the same value, et cetera. Non-fungible tokens are each, unique. So for example, if I don't know, let's say two non-fungible tokens that represent pieces of art, clearly, they're not the same. Like I care which, piece of digital art that I own, and, the value of that art is going to be determined by the market, but, it's a scarce digital asset, just in the same way that Bitcoin provided digital scarcity for money. The same system provides digital scarcity for other types of collectibles. So, if you have a non-fungible token, which is effectively just like a crypto asset, in the form of well, it could be anything. It could be a piece of digital art. It could be representing something in the real world, like a baseball card or a collectible, for example. So it can be digital or, based on physical assets. But, you have scarcity of that digital asset. You can't copy it. You own that asset in a way which it really hasn't been possible for other digital assets in the past, where it's just, copy paste and, you can infinitely replicate anything. So you've seen a lot of growth in the, digital NFT market, in particular around digital art and digital collectibles. I'm going to bring up a little chart right here. So, the NFT space is definitely still young. It's kind of like where DeFi was a year ago. So, this is looking at NFT sales. So you can see not a whole lot, and it's really picked up, in the last kind of 3 months, and has gained a lot more attention in the industry. There are a lot of marketplaces that facilitate sales of the assets. You've seen a lot of interesting folks come in and kind of, notable artists creating, digital arts and, achieving pretty high sums for them, much more than you might expect. So, as you look to the future, the idea of, digital art, digital collectibles, I mean, I think it's going to be a huge market. And, we're really just seeing kind of the early days of this starting to take off a little. I guess it also provides unique ability for artists to monetize their work. So, from an artist perspective, one unique thing about the ability to track these digital assets on a blockchain is you can track when they're bought and sold. So instead of saying, hey, I'm selling you this artwork for $10, oh, tomorrow you're going to go resell it to an investor for $10,000, which, maybe is an extreme example, but happens pretty frequently in that world. You can actually set it up because it's a digital asset such that you get a piece of any future sales of that as the creator of the NFT. So you can say, hey, I'm, this digital piece of artwork, anytime that it transacts as the creator of it, I get 10%. And, you can't undo that just because you own it in the future. So, there's some things like that as well that allow for much, I don't know, you could say better monetization of artwork by artists, in a way which it has not been possible in the past in the same manner.
Yeah, that's a really interesting use case. And again, highly innovative. That was never possible for artists and musicians and others in the past. So this group has been interestingly quiet compared to our other groups that love to interrupt and ask questions. So please feel free to unmute yourself and ask any questions at this time.
So thanks, Bridget and Brooke, interesting discussion. So I kind of two questions. One is, and I think Randy spoke to this and you spoke to it earlier with the SEC piece, but these digital contracts, right, I'm putting a contract, for an example, right? We talked about it from the financial marketplace in the sense that there are a lot of rules and regulations around that, right? But has there been much testing over the last year or two? And I think from the legal aspect, these smart contracts that I put in place or that are put in place within this broader blockchain space, not just in the cryptocurrency, but you spoke to it with regards to the digital finance and then the non-fungible transactions, right? So the ability to carry I use the word ability to carry provenance with an object, whether that's a digital object or an object that exists in the non-digital world. So the smart contracts has always been an area that's, and again, from the legal aspect of it, comes up pretty quickly when we start talking about finance, and stocks is an area that I think has been a lot of discussion about blockchain and maybe not so much, well, crypto, but I always think of crypto as an outcome of blockchain. So, but can you speak a little bit about that from the legal aspect of things? You said, the Trump administration pretty hands-off. These things tend to get settled in the court of law and percolate up into both maybe the federal level where if we don't litigate something, if we don't legislate something, it ends up getting litigated. And so has there been much change in that space or not in what you're close to it day to day? So I'm not, but that's an area of big concern, obviously, probably still is. And has there been any, I'll be bold, clarity brought to that, but probably not.
Yeah, so from a legal perspective, I guess if you're looking at smart contract platforms and things like digital securities, for example, I can't say you've seen a whole lot of attention from regulators there. If you think about digital securities, those are all inherently operating in the existing system. They're just digital representations of existing securities. So, they tend to work within the existing, regulatory environment. So perspective, you have seen some tokens which are registering as securities. So tokens that provide rights to certain cash flows of a company, for example, or there's a Republic token, for example, which is a crowdfunding platform. And if you own that token, you get cash flows from the profits of the companies that are on the platform as they have outcomes and provide profits to investors. You get like a cut of that, et cetera. So you've seen some interesting interesting structures in terms of kind of new types of securities of that nature. Think about smart contract platforms, like let's say Ethereum, for example, which is the largest. I mean, Ether, the crypto asset, is effectively been deemed a commodity by regulators. There's not much attention in terms of trying to do anything about that or anything of that nature. There's been a little attention around, okay, so you put out these smart contracts, and then those smart contracts allow for transactions which maybe are not KYC AML'd, for example. Are you responsible for that? And yeah, I think there are certain Congress folks who would say yes, but I don't think that really has any chance of going anywhere, to be honest. Okay. So not something I worry about. But yeah, sorry, I'm not sure if that really answers your question. Feel free to clarify it.
Yeah, no, it does. In that sense, basically, there's not been a lot of progress. I mean, have there been, and I'm not close to it, right? So question is, have there been test cases in the last 12 to 24 months where people have brought to question some of the things that were out there, don't want to say in the ether, but maybe in the ether around the legalese, validity, if you like, of these smart contracts for certain transactions, right? In essence, that's what, when I looked at this 2 years ago, right, the financial market and the securities market were like, man, this is just, I don't see how this can be anywhere legal in the sense of who do you hold culpable if something goes pear-shaped at some point, or and then the whole dark world, you refer to it, with the Silk Road. I mean, just the perception aspect of cryptos, and what people can and cannot do with them. So
yeah, I mean, you have seen some, question, so that was fine. Yeah, you have seen some action against I guess what you would call crypto mixers, which effectively say, okay, I put crypto into this mixer, and it kind of anonymizes who you are, so you don't have the same ability to trace historically those assets. So if let's say you're laundering money, for example, that kind of thing is attractive to do. So you have seen some action against that, but that's a pretty extreme example of that one thing being being legislated. I don't think there's a whole lot of folks who are going to argue with the merit of that attention. But yeah, I mean, most of the attention has been around unregistered securities from the SEC, and a lot of the old ICOs and stuff like that got prosecuted. You don't have ICOs anymore, really, right? So tokens are launched a different way. Either there is no sale, it's all done through equity, and then those equity holders are get tokens by way of their equity rights, or you just launch the network, and then tokens are earned by users of that network, or some combination of the two. Or I guess there are other ways to do private sales, but you don't have those clearly unregistered security ICOs that you had before. So that piece of it and the risk around it is very different these days.
Great, thanks.
I have a question. Knowing that you spend your time in this area, where are you seeing the best business cases for blockchain, or which areas are getting the most traction? I know I've heard about different things in transportation. We talked earlier about sometimes in the overall food chain. What are you seeing as being the best business cases for blockchain at this point? Yeah, so
I have a clear investor lens on this, right? So that's kind of my perspective in terms of what makes the best business case, I guess. And as an investor, by far, the biggest opportunity around blockchain is finance and financial services. And I mean, if you think about the world of crypto assets and digital currencies, you're basically building a parallel financial system from scratch with no incumbents, and it's just an absolutely massive opportunity. And all these existing functions of our current system, and market structure, and all these other ancillary financial services that go around that are basically being recreated by startups, who are digitally native. And I mean that is by far the biggest opportunity. If you look at revenue growth of a lot of the companies in this year, it's been pretty staggering. So it's not just a theoretical thing, but you're seeing a ton of traction and very strong performance in that segment of the market. If you look at, I guess we would call more enterprise blockchain, it's not as trafficked by startups, because a lot of that is being done by consultants like IBM and folks like that, who are working with semi-permissioned or private blockchains. And there are startups that target those markets, but not nearly to the same degree. So from a startup landscape perspective, the opportunity is much smaller. You have seen some interesting use cases around supply chain. That's definitely one that's got a lot of attention. And rightly so in terms of tracking provenance of goods throughout the supply chain. You've seen interesting things around identity and fraud prevention, and basically proving things out in a public blockchain, which have pretty interesting implications from that perspective. You've seen interesting applications around gaming, which primarily ties to more the world of NFTs and digital collectibles, for example. You have other kind of various use cases, but all those are significantly smaller, in my view, in terms of the investment opportunity versus the world of digital assets and digital currencies and that whole infrastructure being built around it. So that's my perspective on it.
Yeah, I think, of course, finance is it's natively digital, right? Smart contracts are still zeros and ones. And so trying to get into some of the more complex use cases of blockchain finance just makes it that much easier, in the fact that we're still coding our smart contracts in zeros and ones at the end of the day.
Yeah, and if you think about the financial industry, I mean, it's an old industry, right? It's not quick to change. It's not quick to adopt new technology. Fintech obviously has been a big area of focus, but I mean, it's like the equivalent of putting lipstick on a pig, right? You're just putting a pretty UI on an old system. I mean, yeah, it is better than not having fintech, and these applications are much easier to use. But the idea of actually building an inherently better system, built for an internet age, is in my view where the future's headed, and far more compelling in a lot of ways.
Mm-hmm. Great. Any other questions? Quiet group tonight.
Yeah, can I ask, are you seeing companies in crypto security? I mean, my great concern here is that as the values increase, so does the incentive to hacks. And as you look at, for instance, the frequency of 51% attacks, and also the problem that you've got a lot of research showing that with more effort, previously undiscovered vulnerabilities, sort of effectively zero-day exploits, will turn up. So, to the extent that there is an business opportunity here, one of the kinds of things that I have looked for, not seen, are crypto security companies, precisely because I think this is a very insecure and a dangerously insecure medium, and one which is unpredictably insecure, because, as FireEye just discovered, if people want to enough, the fact that you think it's secure isn't enough.
Yeah, it certainly isn't. And so I guess the short answer is no. There are not companies that I've seen that are purely focused on securing, let's say, the Bitcoin network or other public blockchains. The security that public blockchains provide is effectively built into the system. And you may or may not trust that to be secure. I do, but certainly there are folks who disagree with that. but it's the way the system is architected and built in the first place, which provides that security. And you don't need a security company like you would for, like traditional cybersecurity, which is all about, protecting, data silos and keeping you from getting hacked, for example. And if you look at, you look so far, there's plenty of motivation to, if you could hack Bitcoin and steal a bunch of Bitcoin, that's a lot of money. Clearly the incentives are growing, or, the value of trying to do so is growing, but it's never happened before. The networks that have been 51% attacked, like Ethereum Classic, no one uses, and the cost of doing so is, it's nothing really at the end of the day, and no one cares about it anyways. If you're 51 attacking percent, networks that actually get used and people care about, you just haven't seen that. So it's not impossible by any means. There are people who talk about like quantum computing and is that going to break blockchains, all those sorts of stuff like that. I'm no quantum computing expert, but I don't see any companies that are focused on that, because I think it's kind of it's already built into the system, regardless of whether you believe in it or not.
Well, it certainly garnered a lot of users without having an extra layer of security on it thus far, right?
Yeah, I guess if I think about a security company, there wouldn't be a whole lot for them to do, I guess. One of the risks, for example, is if there's a large concentration of mining activity, then miners could collude and try to do a 51% attack. But you can't really protect from that, aside from doing more mining activity in the US, for example, which is something that you're seeing a lot of focus on now, and just kind of distributing out where is that mining occurring.
Well, to give an example of the kind of thing we see in other digital domains, VPN companies spend money on audits to validate how they are working, how they are dealing with their logs. And that is an important competitive advantage, and people do get paid for that. I am not so sanguine about that it's secure because it was architected that way. It was architected without an awareness of the scale of the value that's being held in it. And as the value goes up, so does the incentive to, and the resources available to a potential hacker. So anyway, I've been curious and looking for startups. I have not yet seen them, but I think if you can place a bet on one thing, it is that you will hear, as the value goes up, you will hear of more hacks in the next year, and both more attempts, and also, obviously there's a huge world of academic researchers who produce these speculative, fails, and they report them at conferences. But I can't see any reason that this wouldn't have a commercial impact.
Yeah, if you think about getting hacked, Bitcoin, the network has never been hacked, but there are plenty of hacks all the time of exchanges and centralized place where assets and keys are stored, and people break into those and they steal assets, primarily from centralized exchanges, for example. And yeah, you will definitely see more people continuing to try to do that. That's not changing anytime soon. So there, I guess, clearly the security protocols of those exchanges, the custody that they're using, the systems that they have in place, which are much more traditional cybersecurity in terms of protecting data and, not having employees fall for, clicking on a link and giving up access to their phone, which then gives access to systems, et cetera. All that is very relevant. I guess I haven't seen any companies specifically targeting that for like exchanges, for example. A lot of that is just internal security procedures and more traditional cybersecurity approaches for those companies. But I do agree we'll see more of that, unfortunately.
Isn't that going back to your discussion, as the store of value becomes bigger and it becomes a bigger and bigger industry, you're going to see more issues, or to Alexander's point, people may go after it. It's like if you're going to go after State Street, hearing all the securities that they keep track of, you've got something that big, someone's has crypto in it, someone's going to go looking there at some point in time if the store of value continues to be something that cryptocurrency grows to.
Yeah, certainly. I mean, the more valuable it gets, the more people are gonna see what they can do. Absolutely. You know, one area where you do see, I don't know, you wouldn't call them hacks, but you know, within the DeFi space, a lot of the smart contracts that are, you know, effectively financial applications, you know, there are ways to exploit the smart contracts, right? So you're not actually hacking into these networks, but you're using, you know, very new raw smart contracts in a way which, you know, the creators have not envisioned, and effectively, you know, not stealing, but taking funds by, you know, clever manipulation of those systems. So, you know, I think you'll continue to see a lot of that as well. You know, at the end of the day, you know, all of that just makes those systems stronger as they, you know, figure out issues, and, you know, they realize that, you know, you need to be a bit more, I don't know, a bit more detailed and secure and audited when you put code out there. But, you know, that's kind of the edges of the market, and, you know, people who put their money in untested smart contracts, you know, that's just how it goes.
Yeah, and the basic analysis of movement and behaviors on any chain, you know, chain analysis and others are in that space. And one of the companies that NextCube was advising that I was part of was a company called NODT. So they're a startup looking at specifically at being able to more accurately address and understand actors, so that you can promote good actors as well as bad actors on any of the public protocols. So their solution would work on BTC as well as Ethereum and Neo. So there's folks looking at this area.
Yeah, and that goes to the earlier point around the privacy of Bitcoin. I mean, it is, you know, it's not anonymous, it's not private. You know, it's all in the public domain. It just happens to be strings of numbers instead of names, and they're getting increasingly good at figuring out who those are tied to. So
yeah, so don't be a whale, because you're much easier to identify. Or an exchange. You see, identifying exchanges and whales are very easy to identify. But just one question too around, you mentioned the openness of Bitcoin, and yet the privacy coins, Monero, Zcash, are they likely to succeed in maintaining that level of privacy, or how do you see this unfolding? Is that too good to be true?
So if I had to guess, I would guess that as digital currencies become more prevalent, people are going to care more about privacy as they realize that, you know, these are not private transactions, and their public financial history is, well, their financial history is effectively becoming public, and that they're going to push for more privacy. And then regulators are going to push back and saying privacy is bad. And there's going to be a bit of a regulatory battle from that perspective, but that over time, you know, there will be more privacy built into the system, you know, as I guess as it becomes more mature, but that there will be a lot of regulatory pressure and, you know, let's just say hindrance along the way. Yeah, whether it's, you know, Monero and Zcash, or if, you know, same thing if Bitcoin enacts, you know, stricter privacy features, you know, the government won't take kindly to that. But at the end of the day, I mean, you don't want everyone's financial transactions being public, right? Yeah, I get concerns around privacy coins, and okay, well, you can't see what's happening, but that's why we have cash. That's why cash is wonderful, because I can give you $10, and I mean, not everything has to be tracked in public, right? Exactly. And if cash is becoming digital, we need the ability to use cash, you know, digital cash in the future, just like we use cash today, and not have our whole financial history be public. You know, I think once folks grasp that, I don't think that's attractive to pretty much anybody.
Exactly. Well, I do not need 2 hours of happy hour. I can do happy hour in an hour and a half, no problem. If we've answered all your questions, we should go ahead and wrap up and get Carrie to thank our sponsors again. Brooke, thank you so much for walking us through all of these details. It's been amazing to have your clarity on a number of key areas, and just really appreciate you taking the time. And know everyone in the audience, you're welcome, I'm assuming, Brooke, to contact Brooke at any time. He's happy to answer questions and or share more information around Hut Capital, etc.
Yeah, for sure. My email is brooke@hutcapital.com, which is also on our website, which is hutcapital.com. So yeah, always happy to chat. If anyone has any further questions, don't hesitate to reach out. Yeah, I mean, thank you all for your time and joining us and the great questions and conversation. So really appreciate it.
Yeah, and clearly this is a space that's moving so quickly. A fund of funds may make much more sense than trying to figure out which individual startup you want to invest in.
I would certainly agree. Thank you, Brigitte.
Okay, Carrie, are you, you're up.
Oh, wait. Yes, thank you so much, Brooke and Brigitte, for bringing this to us this evening. And thank you, everybody, for that attended. Just a couple of things. We are nearing the end of the year. So here's the next couple of things that we have coming up. Pitch Club next week, next Wednesday. We've got actually like 7 companies that want to pitch and get feedback from folks like you. So I can't tell you how important it is for charter members such as yourselves show up to Pitch Club and give some honest feedback to the up and coming entrepreneurs in our community. So please plan to attend on Wednesday. In addition, we have the Global Women's Pitch Competition coming up in January. We are sending one of our local teams, companies, Yo Massage, where they will pitch for the chance to win $100,000. There's about 30 different teams from across the world that will be competing. So we are fundraising for them to get to Dubai. Our goal is $5,000 and we just need $2,000 more. So if any of you have some last minute, year-end donations that you'd like to make, please consider this. It is a tax deductible donation, and just reach out to me and I can give you more information on that. The other thing I want to let you know is we are going to be changing up the charter member event schedule for 2021, making it a little bit easier for you all to log on and know exactly when the charter member events are going to take place. We have settled on, tentatively, the 3rd Tuesday of the month from 3 to 5 p.m. And these events will also include the investor pitches that are curated by Ben Nahir, the industry topics that Brigitte has been doing, and then we're going to layer in some charter member interviews and some other fun things throughout the year. So if the 3rd Tuesday of the month from 3 to 5 doesn't work, please let me know. But we feel like if we kind of streamline and standardize these events, we'll get more participation. Brigitte, do you have anything to add to that?
No, that's perfect. Glad that we have a date.
Yeah, exactly. So more on that to come. And then again, just thank you to our sponsors that you see here on the screen, and a huge shout out again to Brooks and Brigitte for bringing us together this evening. With that, that's all we've got. So thanks so much.
Thanks,
Thank you.
everybody.
Thank you.
Everyone.
Thanks,
Thank you.
everybody.
Bye-bye.
Yeah.